It does look like it's getting worse. The picture is getting worse, both in terms of confidence and in terms of inflation expectations. Am I reading that correctly?
That's right. Overall, consumer views have worsened over the last month and have partially reversed some of the improvements that we had seen in June and July. Overall, consumers are seeing a worsening outlook for unemployment, for inflation. A lot of this is being driven by what they're seeing around them in terms of high prices right now. We had a pretty large increase in the share of people who were worried about high prices for durable goods, as well as their personal finances. So consumers don't really see a bright future going forward.
Let's talk a little bit more directly about inflation expectations, because that definitely is catching attention right now. The S&P 500, for example, at session lows. So both the medium term, the short term, and the longer term, an increase from the prior read here, Joanne.
That's right. We saw an increase in both short and long run inflation expectations that stopped a multiple month streak of receding inflation expectations that we had seen in recent months. So that's certainly not the direction that policymakers want to see. A large part of this is likely the tariff developments that we saw in recent weeks. After quieting down and moderating a bit from the rhetoric in April with the so-called reciprocal tariffs, there's been a re-escalation of tariff developments, and that's certainly something that makes consumers worry about prices and inflation.
In terms of the split along party lines, I know for a while, Joanne, that was very strong. So Republicans expected no inflation and Democrats expected all the inflation. Is that still the case, or has it lessened?
Broadly speaking, we continue to see partisan differences in how people view the economy and view inflation. But that being said, over the last few months, both Democrats and Republicans have sort of moderated their views from earlier this year, when Democrats were really expecting a worst case scenario for inflation, and Republicans were actually expecting zero inflation or even lower. Since then, Democrats have come down in their inflation expectations, Republicans have come up. But by and large, this increase in inflation expectations we saw this month, it was across demographic groups and across political affiliation as well.
Let's talk a little bit about how these sentiment surveys often inform how people are going to act, because a separate report from the University of Michigan today shows a 58% of consumers planning to cut back on spending here. It's also just interesting to see that, for so long during the pandemic, you had these sentiment figures coming in very grim, I think it's safe to say, and you didn't see consumers actually pull back. Here, at least, it seems that the majority of them do plan to cut on some level.
So what's really interesting is that there are a couple key differences between what we were seeing with the historic low sentiment that we saw in 2022 and now. Back in 2022, even though people were feeling, historically terribly about the economy, labor markets were strong, incomes were strong, and that we actually saw that in the survey questions that we have specifically about those topics. In contrast, now, consumers, over 60% of consumers are expecting unemployment rates to rise, and that's almost double, pretty much double what we were seeing just last year. So even though they feel they didn't really, they continue to spend despite the fact that they had low sentiment 3 years ago, they had the money to do so. They had the incomes to do so. And right now, they just don't have the confidence in their incomes going forward. So it's hard to see how the robust spending that we saw in the last few years can be sustained going forward.
Joanne, how closely will the consumers that you survey be following the Fed debate, the rate debate at the Fed or at the White House? And if we do get cuts, how much does the consumer factor that into confidence and inflation expectations?
Overall, consumers are generally not paying very close attention to specific data prints or specific FOMC announcements. However, we do have a question on where people think interest rates are going, not the federal funds rate, but interest rates generally. And we increasingly have people, expecting a rate cut. It's an increase that we've seen over the last few months. And in particular, that's something that also has a very large partisan gap, a much larger partisan gap this year than we've seen ever before, actually. which is not the case for other measures. Those partisan gaps have been fairly fixed. So we have a lot of Republicans who are expecting interest rates to fall, whereas less so for Democrats and with independents in the middle, not really expecting a rate cut. And so there's some preliminary evidence that the public rhetoric about rate cuts might be seeping through to the common consumer, but in general, they're not really paying attention to specific data prints and specific policy announcements on monetary policy.